Heritage, the floor is yours.
Thank you very much. And I'm very happy to be here and happy to be able to talk to all the panelists here and to the representatives from 100 countries that are part of this conference. I would like to really thank you for organizing the Ethical Finance Summit in very challenging circumstances. And I'm really particularly interested in the theme, which is financing a sustainable future, climate and beyond. And I'd like to talk a little bit before I start about the South Asian region as well. South Asia, as you know, has a quarter of the world's population. And sadly, over a third of its citizens live in poverty and hunger. And this is an enormous challenge. Before COVID-19 hit the global economy, South Asia was one of the fastest growing regions in the world, with an average growth rate of 6%. Although the financial trajectories have varied across the various countries in the region has experienced remarkable advances. In particular, I'd like to say that in the last 30 years, South Asia has been able to pull 200 million people out of poverty and has significantly raised living standards. Pre-COVID, entities like the Asian Development Bank suggested that single-digit poverty rate was possible within a decade. Of course, as you know, COVID-19, and particularly the third wave, has been a huge economic shock and a health shock in the region in varying degrees, but it's certainly there and is a concern. Obviously, there are challenges on health facilities and livelihoods, and has created multiple challenges for policymakers. As the issues that face South Asia are similar, I'd like to talk a little bit about Pakistan's experience and how the government and the central bank attempted to handle this challenge, and a challenge that was unknown, and we had no textbook answers to this. So first and foremost, it was a health challenge, which was tackled in a variety of ways. And we are happy that it has so far been contained, although we are now in the third wave. And as far as the central bank is concerned, the team worked really very hard and came up with some measures that I'd just like to mention shortly. The first was that we very swiftly reduced the policy rates by about 6.25%, which was amongst the biggest cuts in the world. Then we worked with the banks to encourage them to put in loan deferment and rescheduling, which amounted to about close to $6 billion US. We also gave refinance schemes to the banks, first for the health sector, which is obviously first and foremost most important, for the purchase of COVID preventive and protective equipment, for the establishment of wards, and also to establish hospitals. And the funding that we provided to the bank went to about 49 hospitals and made a big difference. Then we also supported businesses so that people would not be laid off. So to prevent the layoffs, under our estimation, under that scheme, about 1.6 million employees were protected with approved financing of 234 billion rupees. And lastly, most importantly, because we understand that everything we do has to be medium term and sustainable, and we understood that investors were very risk averse at these uncertain times, we provided financing to approved projects of about 435 billion, coming to about 2.5 billion rupees, and up to about a 1% of GDP, to about over 600 projects all over the country, which then actually imported or took local equipment and will serve us well as we move into the future. Now I'll turn a little bit to the topic at hand, which is the financing of a sustainable future. And of course, as we all know, balancing sustainable development while pursuing an agenda for economic growth is a challenging task, particularly in countries such as those in South Asia, where we need to balance a need and a desire, which is quite understandable, for urgent and quick growth, with a equally important desire for ethical financing, so that we encourage the adoption of growth strategies which don't compromise long-term stability. So I'm going to talk to you on three levels on this. First of all, obviously, on climate and green financing. And secondly, because we cannot have sustainable growth if we don't have financial inclusion, because then we will have much more of the elite capture and skewed development. And lastly, I'd like to talk about areas of market failure, because there are obviously a lot of asymmetries in our market, all our markets, where certain segments of the market which are crucial for development are not being adequately served by the financial sector, and therefore encouragement and incentives and targets in many ways are needed. So going on to green banking and sustainable financing to combat climate change, the growth of green finance is a result of the realization that the key role is being played by financial institutions in mitigating the hazardous impacts of industrialization. And since the growth models of Asian economies have been resource and carbon intensive, these challenges are all the more significant, even though our carbon footprint may not be as high as those of the developed countries. And the South Asian countries are highly vulnerable to climate change, particularly in the areas of agriculture. And we need economic, social, and governance readiness to improve our resilience. Amongst the challenges which I personally feel we face in the region is to bring it to the top of mind in our financial institutions and to integrate ESG factors in their decision making in a systematic manner. And the struggle is always to move beyond lip service. So I think for this region, we need to bring that up and emphasize and win over minds to its importance. It's quite encouraging that authorities in all the countries in South Asia have taken a lot of measures to enhance the focus of banking and financial institutions. So there are strategic national level roadmaps, but also we've incorporated environmental and social risk management in the overall credit risk management frameworks. We've got in-house environmental management, the disclosure and reporting of green banking activities, priority sector lending by requiring banks to allocate a minimum percentage of their financing to green and sustainable projects, and the provision of liquidity support through low-cost refinancing schemes for green and sustainable finance projects. And last of all, but most quite important, macro-prudential support and incentives. If I was to give you an example of Pakistan, we are currently working along with the IFC to counter the effects of climate change and increase the share of green financing under a sustainable banking project. The project operates at 3 levels, which develops implementation tools in support of our green banking guidelines, raising awareness and capacity building in the banking industry, and of course, creating market capacity to train and convince, I might like to add. The State Bank has also introduced green banking guidelines. We began this in 2017 to encourage banks to formulate a policy for environmental risk management, increase green financing portfolios, and reduce their own carbon footprint. We are also now planning to issue mandatory instructions regarding environmental risk management component of these guidelines after receiving a response from the banking industry. We tend to try to do everything in a collaborative manner. So far, under our refinance facility, which has been actually very successful, 500 projects have been financed with a total capacity of 850 megawatts, which is a significant portion of our total energy production and consumption, amounting to about 36 billion rupees. I'll turn now to what is very close to our hearts at the central bank, which is financial inclusion. Because if the majority of our populations in the region, or even if a significant portion, are not financially included, we will never have sustainable growth in the future. And the first area is Islamic banking. Islamic banking is very close to ethical finance, as it is faith-based, in the sense that every Islamic financial transaction has a certain economic purpose and activity, and it inculcates transparency and fairness as a priority. Secondly, Islamic banking and finance now needs, in our view, another leap of growth, and to take it to bring a positive change in the financial system, to focus on value-based intermediation and socially responsible investment. The promotion of financial inclusion through Islamic banking is therefore an integral part of our strategy in Pakistan. In order to steer the growth of Islamic banking on sound footings, the State Bank has been providing guidance through the issuance of strategic plans for the Islamic banking industry. We have recently issued our third five-year strategic plan, covering the period 2021 to 25, for Islamic banking industry to make Islamic banking 1/3 of the overall banking industry. This really fosters inclusion because there are a number of segments of our society who would prefer this mode of banking. This gives a consensus agenda and a strategy to take the industry to the next level. This strategic plan is based on 6 pillars, and I'll just mention a few of the important ones. 1, to strengthen the legal landscape, enhance the conduciveness of the framework, and reinforce comprehensive Sharia governance frameworks, improve liquidity management, and expand outreach and market development. And last of all, of course, bolstering human capital and raising awareness. Because the lack of awareness is amongst the major challenges that we face, not just in Pakistan, but in the region. The second thing, which is very important to us, is our digital initiatives. Because we realize that in a country of over 200 million people, we cannot use branch networks and bricks and mortar to enhance financial inclusion. So we developed some time ago our National Payment System Strategy, which sets out a roadmap and makes recommendations to design a national payment system. Digital financial inclusion is one of our major policy objectives. I've been working on a number of technology initiatives to improve the digital banking and payments landscape. For example, we've issued regulations for electronic money institutions. We've also recently launched our instant payment system. One of the biggest challenges to financial inclusion is the amount of cash in our economy. And cash remains king. And so one of the things we've done is introduce this instant payment system, which we call RAST, which means the right way, which is very important for us because we wish to document the economy. And in its first phase, it will do bulk payments from government to persons. Then as the next step, it will work on person-to-person payments, and then person to merchant. And this has been done based on international best practice. So, we're very proud of RAST. Another innovative step, because all countries in this region have very large populations of expatriate Pakistanis or Indians or Bangladeshis working overseas. So what we've also done recently, what we call the Russian digital account, which allows access to our banks to the Pakistanis, there are 9 million of those working offshore. And this used to be a major issue. And this digital account can now allow them to open accounts sitting, whether they're in the UK or in the UAE. So again, that's a very a major step towards inclusion. We're also now in the final stages of our digital banking framework. So we have freestanding digital banks, and that is going through the consultative phase, and then we'll be able to launch that. Then we're doing very exciting work, we hope, on open banking, on an innovation office, and considering matters which are the top of everybody's mind, like a central bank digital currency. So all of these will come in, and we would hope that by removing the need for cash, we will bring many more people into the financial system. Then we move on to something very close to my heart, which is, of course, women's financial inclusion. We cannot have sustainable finance when half the population is largely excluded. And we have seen that the gender gap in Pakistan, as in many other parts of the world, is actually growing. So we will have more men opening accounts than, and the pace of growth of women's financial inclusion has not worked. So now, after a great degree of consultation, we are about to launch our banking on equality policy, which is actually quite prescriptive. And we are going to mandate actually the entities that we regulate. And this has 5 pillars. One is gender diversity within the financial institutions and the access points. So at the moment, the banking sector only has 13% of its workforce as women, which is very, very woefully low. And we are going to set targets over time for banks to have at least 20% of their workforce being women. Because unless women are in the workforce, customers will never feel comfortable, women customers, to enter banks and be financially included. We will also ask for banks to develop women-centric products and look at everything through a gender lens, which is absent at the moment. And give targets within a certain period of time for the number of female accounts that they are able to open and to keep them active as well. So that's going to be the other pillar. The third pillar in this is women champions at all customer touch points. One of the issues that are faced by, I think, women everywhere, but maybe particularly in some parts of the world, is that they're not taken seriously. And so we're going to have women champions, and we're going to mandate that. Then we'll have, of course, the collection of gender disaggregated data, and of course, a policy forum. The last area that I would like to talk about is areas of market failure. And those are, in the main, 3 for Pakistan, and I imagine that they are similar in the region. The first is agriculture, which is the core of our economy. But the access to finance, while we have been growing, is still through the informal sector, which can be quite exploitative. So we are doing many things in that area, such as the allocation of targets, land record automation, credit guarantee schemes, crop and livestock insurance, electronic warehouse discounting receipts, and of course, refinance schemes. We're also about to introduce something for the youth in the agricultural area and helping to design that in collaboration with the government. On the SME side, while we have about 5 million SMEs in the country, their access to finance is severely limited because of a number of demand and supply reasons. And what we are doing now is to try to improve the regulatory framework. And more interestingly, we are going to be coming up with something we believe, very innovative, in that we are actually going to ask banks to bid for the business so that they are given incentives, both credit risk and cheap rate subsidized financing, so that they actually develop the capacities to lend to SME and do not use their traditional ways. So that's going to be something we do, very exciting, very different. And because normal process is to force targets on banks, voluntarily or mandatory. But this is the time we're going to actually ask banks to bid for this business, which is, I think, is going to be a very interesting way of looking at SME financing. And the last area that I'd like to talk about is housing and mortgages. In Pakistan, only 0.5% of our GDP is mortgages. And that is a major issue. So we've taken a huge initiative along with the government and with mandatory targets, and by creating a facilitative environment to be able to build mortgages, especially for the lower income groups. For example, there are so many people in the informal sector, so we have to make models that will do informal assessment. We've looked at the legal framework. We're looking at capital market development. We are looking at developer finance. So that is something that for sustainable growth and financing for sustainable growth is extremely important. So those were some of the areas that I wanted to talk about. I think we're on a very exciting journey. And this is something that's very important to us. And any support, any ideas are more than welcome. And I hope that this conference and the summit will give us a lot of those. And I wish every success to the summit. And thank you so much for listening.